How's it going, everybody? I'm the BTC Reaper, and my goal on this channel is to teach you how to reap the rewards of trading while the price is going up or down. Over on the daily, you can see we came up to this 19.1 area that I said we could touch yesterday, where we have all this resistance at. We did get rejected at that level, as is a higher volume area. We are bound for a cool off as we've been bouncing up pretty high. If we do make a downward candle tomorrow, which we are starting out, we could create a rising wedge here, which could take us back down to 17K. If we break out a little sooner, it could take us down a little lower. Our stochastic has a bearish cross if you zoom in on it a little bit. Right here you can see it. I don't want to zoom too much or my chart will get a little goofy. And we are pointing down on our RSI, which are some bearish signals, as well as getting rejected at this key level. Over on the 4-hour, you can see we have bearish divergence, and we are attempting at making a bearish cross here. We also have a doji candle here suggesting that buyers are getting exhausted, and sellers may be able to gain some control if they're able to create a bearish engulfing candle here, which would be a red candle that come down to where the green candle is. That would be a bearish pattern that could drop us lower. Over on the 15-minute, you see we have a little bit of a bullish cross as we're a little oversold. However, that could also signal that we're losing momentum, as that's what this area means on the stochastic RSI. The RSI is falling on the 15 as well. However, we're trying to make a bounce at this neutral area, so if the bulls are able to reclaim this ground, then we could see a little bit more of a pickup. Most of why we are rallying today is due to CPI coming in 0.1% lower than it was last month, so people are getting hopeful that interest rates may not be hiked as aggressively and we may not enter too bad of a recession. A lot of that is attributed to the gas prices falling, so prices haven't been rising quite as much, so any kind of a spike in those gas prices could cause CPI to pick up again. If we look at WTI, which is offshore oil, which we get quite a bit of oil offshore because we're not really self-reliant anymore. We did have a gap down that we broke down to. All gaps fill. If you don't know what a gap is, I'll start there. A gap is where you get a big fluctuation in price with no candlestick. So like right here, there's no candlestick. That's a gap. Right here, that's a gap. So those are the two main gaps we're looking at right now. We had this big gap up, which made us make a new high in price on our oil, and gas prices were pretty expensive back then. That's back in November. Then we started to cool off a little bit, and we gapped down to this area and filled this. We came down to this golden pocket of this Fibonacci area, which we have touched before. This created somewhat of a double bottom. If we are able to keep this momentum with oil, we could fill this higher gap around this $7 area. So that might mean we might see like $3, $3.50 gas or something. I don't really know how to equate that to the gas price, but we could see an increase in gas price, which could cause goods to go up, and then that could cause CPI to go up, so the Fed may not be able to pivot when they want to. Thank you for watching tonight's video. I hope you have a wonderful night.